Hey, it's Ed here. Today we're taking a look at technical analysis for SP500 with Elliott Wave Theory. If you want to educate yourself and support me, you can take a look at Patreon, where you can find Elliott Wave Basics course, access to weekly live streams and extra content overall. Thank you for your support. Let's get into the charts next. So let's hide these. Let's start with the higher time frame, because again we had a bit of a change here, even on higher time frame at the moment. On the futures charts, we had this as a possibility being five-way structure coming down, and that being a start of something. However, that is now invalidated on the cash markets or SPX, where we have taken out the previous highs here. So again, these had the option here of being this as a five-way structure coming down. Now that is invalidated, which confirms one of the counts where we had this as the expanded flat. And now we'd be looking for a partner leg for whatever this is here. So that would be the overall idea here. On both of these, SP500 and on the futures charts and on the cash markets as well. So let's get rid of these and start looking into the counts that we still have left. So overall, this was the idea where we had this as three-way structure into the wave W, three ways down into X, and now we'd be looking for that wave Y overall as in the form of a basically a three-way structure up top. Then the other counts that is still possible is this very ugly diagonal into the highs of here, and then have that exact same expanded flat here, and then a continuation, but instead of being corrective here, we would be having an impulse count up. And that is still possible. This one was invalidated because again, on the cash market at least it was invalidated, because again this high has been taken and this would be a five-way structure starting something new. So that is no longer possible, at least on cash markets. So that's why I've deleted the count here. And basically this whole count is basically getting invalidated. So what we would be following is, for bearish counts, we would be following this count, where we have this as expanded flat and upwards here. And for the bullish one, pretty much exact same pivot points, but instead of having an impulse wave here, we'd be having this as a corrective structure. But yeah, those are the both possibilities. Locally, let's check out the bullish count first. In here, we can still be labeling this as a wave 1 diagonal, 2, 1, 2, 1, 2. So overall, we have 4 nested 1, 2s, which is making this whole count less and less likely. We start to need to start moving up higher, very much so. We have now taken here on 1 hour, we have taken out the previous highs, which is a good thing. So this means again that momentum is going to the upside. However, we are still within the really corrected targets here, more locally. We have not even hit the 1.618, so again, this is not really looking too good for a five-way move. On Nasdaq, I think this was extended and we hit the 1.618 there. So again, we need to be comparing the different indices against each other, and there it is very possible that this indeed was a third wave here. And in my opinion, I think we still need that fourth to be created and fifth if we want to have this count to be going through. But until that happens, we can still be thinking that we have reached some of the more bearish targets here and could be looking for a correction downwards. Get rid of some of these unnecessary ones here. There we go. And then we had the more bearish one, where we had a three-way structure into W, three ways into X. W could be here already as well, and we would have a bit somewhat an okay look as well. Maybe we just shift it over there. It does not really matter. The overall structure is the same. It's just going to be shifting our extensions a bit, not too much. Then we would have this as an A, B, and then C. That fits decently, and again that would fit the idea of this being a far-away move here. But again, we would need that one more top here if we don't want to have that truncation. For the B wave, we would have this as an A, B, and C with a truncated structure here, which would create a running flat here in the middle. It is very ugly, so there is again other possibilities here as well, which I've labeled in the same chart. So we would have this as an A, B, and C into a wave 1. This would be wave 2, 3, 4, and 5. So we would overall have a diagonal of some sorts here. to be created, that is definitely a possibility, and that would make the more bullish count a bit less bullish since we don't have that many 1-2s in there. What goes for the bear count here is, or what comes to the bear count is that we're still looking for this partner leg for that wave Y. So at the moment we have gone beyond the 1-to-1 extension here and are going towards the 1.236. This means that again we are still within those bearish targets, so this box basically here, and there is definitely a chance that this could be finishing up very soon. So downwards is definitely a possibility. I'm not going to be trying to catch a knife here, but if we are going to be looking at an impulsive structure coming down and looking to get a retracement, then I'm definitely going to be hedging my position that we had from here with a short position here as well. So that is the game plan for me at the moment. Now let's zoom out a bit, because for the bearish count we still have our higher targets here. For these we had this one, so we'll probably should change this to a different folder. Let's do that. So these are the targets. We are right around the 0.618 extension of this WXY. However, again, this kind of seems kind of small if I'm just looking at it. Let's take a look at this measurement here. Is it 1-to-1? No, it's not yet. Generally we want to be seeing the 0.618, which we have already seen, and 1-to-1 would be coming up in, well, that would be next month, halfway next month, but I'm not quite sure if this is going to be taking that long. If we are comparing the wave W here for that wave Y, we don't really have too many similarities here. This would be already 7th of February, so then they're not really lining up too well, unfortunately, the time aspect. So I don't think we need to be worrying about that too much. The minimums that we want to be seeing are, however, already met, but overall we want to be seeing a bit more than the 0.618. So there is also a possibility where this three-way structure is the start. So that would be fitting the same as this wave A here. So this would be A, B and C, or a WXY, depending on how this is going to be forming. We don't want this structure here, however, to be too long, because this was very, very fast, this wave X. And the longer this potential B wave here gets, the more and the worse this whole thing is going to be looking like. Also, we had the highs here, which have yet to be taken out, like we have already in SPX. So that is something that we definitely want to be taken out. There's liquidity for sure above here, and even possibly or most likely here. So so that is definitely an interesting area. At that point again, we are close to the 1.618, so we don't really want to go much beyond that at that point. However, again, the higher time frame degrees and time frames and targets here are around the 4400, and that again gives us this liquidity up in here. So again, those are some of the targets, and we definitely need to be monitoring how this is going to be turning out. If we are going to be getting that pullback and then upwards again to get that partner leg overall. At that point again, I would be turning more bullish. If we are getting these smaller time frame 4s and 5s starting to go, depending on the wave structure here, we can take a look at which we are going to be preferring. If it is going to be choppy like this, then the only bullish option we see is creating more 1-2s, and that is not good. So overall, we would turn more into bearish scenarios, or more of this count where we have this as a WXY rather than the bullish count. But those are the ideas that I currently have for S&P 500. If you made it this far into the video again, I would appreciate the likes. Link to my free Discord server in the description below, and for now I thank you for watching and hope to see you on the next video. Bye bye.